Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you are very well today. And in today's markets, guys, well, we have just hit the history books another time, this time to the upside. In the last 5-6 days, we've been breaking records left, right, and center, both to the downside and to the upside. And I'm sure you guys have already seen the news that resulted in today's gains. It was, of course, the 90-day pause on all tariffs, bringing down the reciprocal rates from whatever they were across the board down to 10%, and the markets absolutely loved it. I'll remind you, we had a similar rumor of a pause just on the Monday session, which caused the markets to rally in a substantial way. You remember we covered this on the channel. This was the rally after the tariff news on the Monday session where the markets rallied 8%. Well, now the news was official. Trump coming out with the news right around 1:20 p.m. Eastern and pretty much releasing the tariff news and pushing it back to about 90 days in the distant future. So it was a day for the record books, guys, and we've had many days for the record books in the past. You might have remembered just the last few days, we had some wide ranges here in terms of record setting in terms of the last 2 days of trade. We also had some records in terms of the spike in the VIX and how fast volatility has been rising over the course of the last few trading sessions. And today we officially hit some more records in terms of the percentage gains on the SPY. The percentage gains on the SPY today, the now 9th best day on record, 9.5% to the upside overall. And in terms of the NASDAQ, guys, this was actually better. This is the second largest day ever in terms of percentage gains on the NASDAQ overall. So was today a power play? Was it just a negotiation tactic? Or was there maybe something more under the hood? That is what we're going to dive into today, and it's going to be a lesson on the bond market and the complexities of the global financial system, which more likely than not, and it will not be officially stated, but more likely than not, led to today's decision. So in today's video, guys, we're going to do a few things together. Number one, we are going to recap exactly what happened in the bond markets shortly before Trump made that announcement, and certain things that were very peculiar and had been happening over the last few days in terms of liquidations, not only in terms of equity liquidations, but liquidations in the bond market. And you guys know the liquidation pyramid, when it starts, it's very, very difficult to stop unless you have very large events such as today. Then, number two, we're going to take a look at the technical analysis across the board because now we have large level shifts and it has led to a tradable bottom, not only on individual indexes, but also on stocks alike, individual names that is. Thereafter, we're going to take a look at our big tech names. See, can we find some levels to trade off now that big tech names were absolutely flying in the later hours of the afternoon? And to wrap it all off, I'll give you guys an update on my portfolio for a few of the position shifts that I made after we caught the news in the Discord extremely early, 4 or 5 minutes after it was announced. We were able to shift the positions and close a bunch of winning trades and reposition for new ones. So I'll wrap it all off at the end with that. Should be a very fun, interesting, and perhaps you guys might learn something in today's video. So let's jump right into it, shall we? The SPY closing the day 10.5% overall, and the Qs 12% to the upside. All major indexes rallying an absolute ton. Probably the best day in semiconductors of all time, right? Now, moving into the heat map, you will see that everything was pretty much in the green, except for one little name in this sector right here, which was Dollar General. For the most part, though, everything massive, guys. These are record-setting days almost all across the board, so we're not going to go through every single one. You guys can do that on your own, but just understand, right? 15 days on Apple, 12 days on Amazon, 22 days on Tesla. We've seen those before. 14 on Meta, NVIDIA, 18. Usually, you only see those moves after earnings. Moving on to the one-day relative, everything, of course, now in the green. It didn't always start that way, and we're going to do a recap of today's timeline because it started off a little bit bumpy. On the one-week relative, though, even with all of today's gains, we are still net negative on a one-day relative performance. That is quite simply because, well, when we measure versus last Wednesday, that was the tariff announcement on the SPY, not quite getting all of it back. The Qs as well, not quite getting it all back, and individual names, some of them have breached above the last Wednesday tariff announcement, but a lot of them still remain below, although we have made a massive V-shaped recovery and has provided us now with some form of a tradable bottom, as they like to call it, yeah? So that is the performance in terms of that. Now, before we get into more technical analysis, guys, I want to do a timeline of what exactly happened today. What started off the day early in the morning, of course, we have to recall that yesterday, President Trump increased the tariffs on China by 50%, to a total effective tariff rate of 104%. So we started off the morning with this headline right here. China places 84% total tariffs on U.S. goods. Now, that was an escalation, but not tit for tat, not quite 50%, but they did raise. Then the morning moved on and the markets were largely somewhat positive all throughout the day. You can see that right around here. We were positive from the open and kind of just oscillating here and there. But then came something that a lot of people were looking at for the past week and a bit, and it has to do with the bonds. You remember we've been covering the bonds for, well, every single day pretty much, but this move was an unnatural move resulting from last Friday on the TLTs. The TLTs is a very complex trade overall. There's a mix of trying to balance out the risks of inflation, which keeps the longer term rates high. There's also a premise of potentially other countries dumping US bonds as they seek to manipulate their currencies to make their exports a little bit more manageable, maybe even some bond trader speculation as well. And possibly just the credit worthiness or the credit risk to the United States of being now somewhat more uncertain than they were in the past amidst all of these recession concerns. So this is what's been happening in the bond market. But the one thing that was happening, guys, now for a few weeks in a row was the unraveling, or rather the accelerating of the credit spreads between the short duration bonds and the long duration bonds as well. Let me explain real quick. So here is the timeline for the day. It all started off with this one thing right here. It started off at 1 p.m., guys, over the course of the afternoon today with the 10-year note auction, which did come out very positively. Now, these happen every now and then. Every week, there's a different auction. These are new bonds that are issued onto the market. Now, it's a dealer market, right? A dealer gets hold of all of the bonds, and then similar to any other auction, like for cars or whatever, well, people participate and they bid whether or not they want to buy those bonds. As we've been seeing with the TLTs recently, nobody wanted to buy these bonds. Everybody wanted to sell them. These were the 20-year ones. But we had a bond auction yesterday that had everybody a little bit spooked as well. And as a matter of fact, that was the bond auction for the 3-year bond auction yesterday. It was a very soft auction, guys. It left a lot of people worried. We didn't talk about it too much on the channel, but it was noteworthy. Treasury yields jump after a very soft 3-year auction. Only 79.3% of all bonds were purchased. The dealer is forced to retain the rest. That is a very weak auction and left a lot of people nervous overall. But for some reason, guys, at 1 p.m., you would expect the auction on the 10-year yields to equally be somewhat soft. Why? Because nobody wants to buy the bonds in this current environment right now, especially with these tariffs under place. If you're expecting a recession, you will want more risk premium, and that is why the 10 and 20-year yields have been rising. But something funny happened today at 1 p.m. when buyers showed up in force for the Treasury year 10-year auction, which shocked bond traders. And I was listening to this one live. It was quite shocking. Everybody was expecting it to be very soft as the one yesterday, which showed that the markets were very timid in terms of purchasing US bonds overall, which is not very good, guys, for the liquidity of the bond market, the largest market in the world. It shocked all bond traders overall, and it was largely unexpected. Now, this is in an environment, guys, where we've had one of the fastest increases in just a short amount of time of the spread between the 10 and the 2s. We rarely talk about this on the channel, except for when it makes exceptional moves. And the rally that we've been having in the past few days is definitely an exceptional move. Now, that puts a lot of pressure on people, especially those who might be leveraged on bonds. And you've been seeing a deterioration in bonds as of recently. And when bond traders are forced to liquidate positions as a result of possible carry trades or just trades on margin, I'll remind you, a carry trade is very similar to what happened in August in Japan, right? A carry trade is very simple. You borrow a certain asset, whether it's cash, a currency, or another asset, and then you just borrow that asset at a certain interest rate, and then you put that money into another asset that yields higher. When the spreads widen too fast and the currencies fluctuate too quickly, it puts a lot of pressure on that trade and people are forced to unwind. What do they unwind first in the bond market? Well, first, just like anybody, guys, when you guys are forced to liquidate some of your stocks, what do you want to liquidate first? You want to liquidate the trash, stocks that are not so good. Maybe you went all in on some quantum computing stocks or you have a portion of those. You want to get rid of those first and you want to hold on to your Microsofts, your Amazon, stuff like that, yeah? Bond traders are just the same. Look what happened to the junk bonds in just the last few days of trading since the tariffs. This is a massive sell-off, guys. And keep in mind, yes, we have some sell-off similar, but this was a rate increasing environment by the Federal Reserve. It was largely predictable and people were positioned as such. Now, right now, you had a massive unwind of the junk bonds, which yield the highest interest rate overall, and that are the most risky assets to hold in the bond market. Then, when you're looking to liquidate things, then you go to HYG, you go to these corporate bonds, and keep in mind, traders are not trading HYG as an ETF. No. They have the actual paper, and that market is not liquid, guys. Those are dealer-to-dealer deals. You can't just go on Interactive Brokers and buy bonds and sell bonds like that to the tune of billions of dollars like these people do. It's an illiquid market. You have to call the other person and agree with the price. HYG, massive decline. And then when they have to liquidate absolutely everything, then they are forced to liquidate treasuries, either their own treasuries if they're different countries, or US dollar treasuries, which are known to be the most safe in the world. So that is the timeline with what's been going down in the past few days since the equities markets have been unraveling, the bond markets have been unraveling overall. And I truly think, guys, this is not really tinfoil, and you'll never really know if this was the true answer. But President Trump would probably not do this. He's been very vocal on not minding what the stock market is doing. But when it comes to the bond market and a credit crunch and a liquidity crisis, similar to what we had in 2020 and similar to what we had in 2008 before the Fed and the Treasury stepped in individually, well, the bond market tends to dictate how things should go, yeah? I really think, especially having someone like Bessent on his team, keep in mind, guys, if you guys didn't know, right, Bessent was on the team that helped make the trade possible for George Soros when they took a bet against the pound back in London here in 1991, right? This was before the collapse of the pound, when the pound was pegged to the Deutschmark and George Soros called the bluff. I'll remind you that Scott Bessent was instrumental in that trade, and I do think that the alpha or the information for today came to him. I think he had to whisper in President Trump's ear and say, listen, there's a lot of pressure on the bond markets right now, and someone was possibly on the verge of blowing up, someone very big, whether that be a country like we saw in Japan in August, or whether that be several large institutions that will not disclose their positions to the public, which is why it's very tough to get this information, right? I do believe that there was a call that was made that kind of forced President Trump's hand into lowering these tariffs. Now, you can call this a conspiracy theory. You can say, no, it's just the art of the deal. It was a negotiation tactic. But I'll remind you, if that's your point of view, guys, overall, well, the art of the deal would have stipulated that since we've had 70 member countries come to the table and none of them have dropped their tariffs except for a few, such as Israel and Argentina, well, since none of them have agreed formally to drop their tariffs, they would have been negotiated one by one. And only when Trump would have had those tariffs negotiated down to 0 or 5 would he have dropped the tariffs on those other nations one by one. Not a sweeping reduction 1 week after he put them in place. That is technically President Trump, quote unquote, folding on his own deal, right? So we have to be reminded of that. Now, that is not the official statement by the White House nor by President Trump himself. He took to Truth Social 18 minutes after that bond auction, which was surprising. Somebody big stepped in, which means that somebody big had the alpha beforehand. If not, it would have been a ghost town, just as yesterday was as well. Here's what he said. I am hereby raising the tariff charge to China by 125%. That was after China's formal raise in the morning, so escalating there as well. And he said, based on the fact that more than 75 countries have called the U.S. to negotiate, then he authorizes the 90-day pause. Keep in mind, not getting any formal deals from those other countries, just coming to the table to negotiate, right? Which is arguably one step before the deal is actually made. That's why you have to take this with a bit of a grain of salt, yeah? And then he officially reduced them to around 10% overall. And when he was asked in a press conference later in the day today, he said that there was people that were yippy and afraid. Now, keep in mind, if you listen to that whole press conference, which I did, which was given just outside the White House, he said that it all started last night, that he was talking about this last night with his advisors. What is the one thing that happened last night? Well, you will not see it on this chart, but if I could find the futures charts for you guys, sorry, I could not bring them up for the TLT. The TLT, and we were looking at this in my Discord as well, the TLT overnight rate yesterday was down 3%, over 3%, right, on the bonds. And he hinted that these discussions all started last night. Funny enough, Japanese delegates and Korean delegates were also in Washington as of yesterday as well. They have a high stake in that, especially Japan, guys. Japan is very tough because they not only have a safe haven currency to manage, which you can see the damage that's been done to when the currency moves too fast. It moves like this. I'll remind you, this is the exact same thing that led to the blowing up of the carry trade back in August, when the currency rallies too fast against the dollar and they have to offload some trades or whatnot, but they can't do it because the bond market and the yields are rallying as well in a rate cutting environment. You end up trapped with a very, very, very large bag. And if you want to kind of save the day, well, the trade needs to be unwound, or the conditions of the market need to be alleviated a little bit. So that is the timeline for what happened in the bond market over the past few days that have raised some eyebrows. Now, keep in mind, this is my opinion, but it's an opinion that I've been noticing here in the bond market over the past few days with how fast the credit spreads have been rising, with the offload and liquidations of all the junk bonds, the high yield bonds, and now even into the actual formal US treasuries, and the rapid either appreciation or depreciation of other countries' currencies in a very, very fast-paced manner. It leads to a little bit of a credit crunch, a liquidity crisis, and if it's not caught soon enough, guys, you truly can end up with a situation where the bond market completely dries up, similar to 2008, similar to 2020. And trust me, you guys do not want to live through that as well. It's an absolute mess to fix. So I think that is what happened, which led to the quote-unquote deal that was had, right? The surface level arguments that you'll hear everywhere around here in the next few days is the art of the deal. It was always a negotiation tactic or whatnot. But when you look at the internals of the market and what the credit market was telling you or telling everybody, is that there was a very big problem at hand. And if something was not done, it would have led to something very severe, guys, very severe in the markets. We've been seeing equity drops, but that's just very surface level. You cannot trigger the bond market into a global stage sell-off, or you're going to break some things that take a very, very long time to fix, okay? So that is a quick segment on bonds. Hopefully you guys learned something, of course. It's very complex. I tried to explain it in the easiest way possible. Apologies if I left certain details out or if it's not clear, but hopefully you understand the gist of all things, yeah? But anyways, after today, more news headlines. Well, as soon as the tariffs were removed, we got headlines like this. You might remember Goldman Sachs increasing the recession odds in the last few weeks from 15 to 20 to 45 to 60 just yesterday. Yeah, well, they took those off. Goldman Sachs rescinds recession call after Trump's tariff pause, completely eliminating the odds of a recession. JP Morgan, you might remember that they were saying a recession is now inevitable. Jamie Dimon was actually on this morning saying he expects a recession and defaults. And default, meaning the credit market as well, right? Urges quick trade deals. Jamie Dimon's a very important man as well. And right before that, yesterday, the odds of a recession were 79%. That's why I think, guys, I think several very large people had to inform the president that if he were to maintain this path, he would embark in some form of a credit crisis or a liquidity crisis in the bond market, which would have been fun for absolutely no one, right? And it all started, this was not starting as of a week ago, right? It all started in March. U.S. corporate bond spread hits the widest in about 6 months on recession fear. They get wider, trigger some liquidations, starting at the junk bond level, the high yield corporate bond level. Then when it gets up to treasuries, guys, you got to stop it, or by eventually it's going to be too late, yeah? So that is pretty much everything that I wanted to cover to you guys in terms of the yields and in terms of the recession odds now coming away. So hopefully that was a very interesting section for everybody. But once again, we've made history today, one way or another, in terms of the market moves to the upside. So hopefully you guys are able to find a little bit of recovery in your portfolios overall. Now, in terms of the trading versus investing portfolios or long-term investing portfolios, trading, I've always said, guys, you need to be very nimble, adapt to the data. Do not predict, because today's markets are very unpredictable, yeah? A lot of uncertainty is still on the table. We still have 10% tariffs, not zero tariffs. So there is still some overhang risk, which is reminiscent somewhat of 2018, right? 2018 is going to look a lot like this year, most likely, guys, where we had an initial fear sell-off in the markets, then the markets were able to recover, and then as the impact of those tariffs came into play later on during the year, and this was Jerome Powell being very stubborn with increasing interest rates as well. I mean, they were on an uptick path, to be fair, which they started in 2017. It went from, to 1.5, and then up to 2%, not to where we are today. But, this is what exacerbated the pain. So any real pain as a result of tariffs that would be maintained past the 90-day pause, probably likely going to be felt in Q3, Q4. But what it does right now, guys, it does offer us a tradable bottom opportunity. So the big fear, as we've seen, guys, just a quick recap of the last few weeks. What has happened here? The last few weeks, we got tons of decent data. decent CPI at this same time in March. The market didn't care. Jerome Powell giving us a very nice speech during the FOMC. The market didn't care. Very good jobs reports, the non-farm payrolls, the JOLTS jobs openings reports, and the ADP employment change of last week. The markets did not care. The only thing that the markets cared about since last Wednesday is the tariffs. That's all they cared about. You saw it with the market drops. You even saw it on the Monday session when we had that crazy rumor that sent us skyrocketing. And then yesterday as well, when China responded, we had one of the largest intraday swings the markets have ever had, period. So it stands to argue as well, when the tariffs are removed, well, you get the massive volatility being brought back again. So the markets are highly news dependent right now, but we have removed a very large fear catalyst. So now if we are trading, yes, we can be now cautiously optimistic rather than cautiously pessimistic, with a tradable bottom level being kept in mind. If you are a long-term portfolio investor, the instructions were very clear. This entire time I was telling people to DCA very slowly into your favorite high-quality companies or your favorite high-quality ETFs, and then with a very slow pace, right? The goal is not to try to time the bottom with the entire cash stack and prove to everybody that you're a genius, right? No, no, no. If you were DCAing this entire way, you were probably very happy that you were buying in these times, and the objective moving forward is exactly the same. We continue to DCA every week with our paychecks, and we just keep our expenses low, maximize our incomes, and invest the difference for our future selves in the next 5, 10, 15, 20 plus years. So hopefully that is very clear on what we've achieved right now. We can now pivot our trades to more bullish trades than bearish trades, keeping in mind that not all the uncertainty has been removed, but at least 90% of the uncertainty has been removed. We're coming into corporate earnings, so we have to keep that in mind too. But for the long-term portfolio, we should be still DCAing as if nothing has changed. Sure, could we have gone a little bit heavier down there when the markets were down 20+%, 26 on the Qs and 30 plus on everything else? Sure, absolutely. And you guys saw me do that too. But should we be FOMOing into the market, deploying all our cash reserves right now? I truly don't think so, guys. Be very patient still, be very nimble with everything, and just keep a steady pace of DCA orders going into the market with every paycheck, and don't overextend yourself trying to commit to one narrative either direction. I think that there's going to be tons of volatility remaining on the table through the next 30 days at least while we go through this earnings season and we get more clarity on these ongoing negotiations for the tariffs, namely with China as well, because those are going to be kind of sticky headlines that we cannot ignore, right? Everybody else's tariffs are gone down to 10%, but China's are still 125, and it could escalate further unless negotiations are being met. But this is a very nice first step in the markets overall. So now let's get to some technical analysis, shall we? So in terms of the SPY, guys, huge engulfing move, of course, as we can clearly see on the charts. This is now roughly a maybe 85, 90% retracement, actually an 80% retracement. So now it's up to the bulls. This is not a trend change, which is why we cannot FOMO. If we want to position for trades, we should be looking for the daily higher lows. Resistance above right now is 550 to 565, and support below is 525 down to about 495. Keep an eye on the lower time frames. How do you know when this move up is finished? You are going to see a rolling over of the hourly trend. When that happens, you look for the higher lows. How do you know the higher lows are set? It'll look something like this. Loss of the hourly time frame, recapture of the hourly time frame. When you get that recapture, the entries are here. The stop goes below the low, which at that point will be your daily higher low, and then you can position from here rather than just going long right now and putting a stop loss all the way down here, because that is truly the stop loss if you were to take a move from here, right? On the weekly, we'll see how the weekly candle closes, but very nice engulfing move. This is still a weekly downtrend. Uptrend needs to be reset with a higher low into higher high. We'll see how high they can push before resetting that weekly uptrend. So we'll keep an eye on this, guys, one day at a time. If you are trading, if you are a long-term investor, guys, I do not want to see you guys say, oh, wow, no, I missed the bottom. I have to deploy absolutely everything here right now. We've removed a lot of uncertainty, but I'd be lying to you if we said we removed all of the uncertainty, yeah? Moving on to the Qs right now, up 12%, same context, the analysis is the same. Daily downtrend, big, sweeping, engulfing move. This is a better move than on the SPY, up almost 80+%. The bulls have a phenomenal chance now of resetting the daily uptrend, coming into resistance, 467 up to 482. Expect there to be some sort of a challenge in this region. If we just blast through it like it's not even there, eventually we will need to set the higher lows. If you want to catch those higher lows, guys, pay attention to the hourly time frames, right? You will eventually get overbought here. You will lose these hourlies eventually, and then you'll recapture them. On that recapture, the entry goes here. The stop loss goes down below the lows, which will then be your daily higher lows. And then you're looking for the bulls to go for a bit of a trend change, but they do not have the trend just yet. They have a nice bounce. We need to confirm the trend change. Weekly also looking like a very nice weekly engulfing move, but the volatility is still very high. So be very patient, be very nimble in your trades, and do not project and forecast out too much, guys. Just play the charts. Don't play the P&L. Always play the chart. Best piece of advice I can ever give you is don't play the P&L. Play the chart. Moving on to XLF right now. XLF also rallying nicely from the bottom into resistance, 48.31 to 46.71, reclaiming the 200 daily EMA barely, right? So we know this is a big area of resistance overall. It's a very nice size bounce. That is a 618 bounce overall. Same concept. Look for the daily higher lows. Then you can position for some possible swing trades rather than just chasing the market right here, pure FOMO, and then just getting upset by maybe that higher low pattern taking place. In terms of the weekly, also looking fairly good right now. Right? Weekly downtrend is still to the bears. We have not changed the trends, but a 618 bounce on the weekly. Eventually, they will need to recapture those weekly timeframes overall. And I will remind you, for financials, guys, financials, very big catalyst. The bank earnings are on Friday. So keep that in mind, please, especially if you are playing financials right now. There are still some great opportunities to write puts under the market because the VIX is still very high, but be very calculated and be very careful if you're choosing to do that on financials into earnings. Moving on to healthcare right now. Healthcare also with a beautiful bounce from the bottom, 4.35. I mean, these numbers are crazy. I feel like I'm just saying them without how historic they are, but they are really crazy, guys, all things considered. Healthcare not reaching the highs of yesterday's trade. That's okay, though. Daily downtrend is still in motion right now, looking for the lower high. Nice size bounce right now. This is a bit of a weaker bounce, just under the 618 mark, but still very good. We know that this has been a big area for healthcare overall, right? Big support range, roughly 140 down to about 125. So the bulls will be looking to make somewhat of a recovery, but keep in mind this has been some sort of a, head and shoulders pattern, which did follow through. And now we're kind of looking for the bulls eventually to reset that weekly uptrend. Some of my favorite names, especially with the Medicare news, UNH, but that one is gone right now. You need a retest down here of roughly 556 down to 526, looking for the weekly engulfing move, higher lows, and then possibly run. This is your trade entry because resistance now becomes current support. Moving into SMH right now, one of its best days probably on record, to be honest with you guys. I mean, I don't even want to go back in time to try to find a 17% day. You guys can if you want to, but it's probably the biggest day, or if not one of the biggest days on record for semiconductors. Daily downtrend was clear, nice engulfing move, almost a 100% engulfing move of the last daily leg of selling. Very close, 95% bounce, yeah? So one of two things is going to happen. We're either going to fully engulf and come into resistance, 232 to 216, or we're going to consolidate a little bit from here, try to find a higher low, and then make an attempt, right? It'd be highly surprising. These are the tradable bottoms, guys. All of these are the fear catalyst lows. It stands to argue if the short-term fear does not get below these levels, if the tariffs do not get higher than what they were before 1 o'clock today, it's going to be very tough for the bears, at least in the short term, to come back, challenge these levels. These are your fear, capitulation, liquidation, margin call lows. So these are the areas on which we need to be basing any short put trades. On any pullbacks, we're looking for short puts. They have to be in or around or under these low levels. That's what I mean by saying it is a now tradable bottom, yeah? Moving on to the weeklies are still in the context of a weekly downtrend, reacting nicely from the 200 weekly EMA. You could say that the charts are a self-fulfilling prophecy overall, but it's very funny how a lot of these charts stop just shy of their 200 weekly EMAs. Yeah, the Qs, you could see it as well. The XLF, not quite there. XLV also coming into it, but getting rejected. SMH coming into it, getting rejected. So is it a self-fulfilling prophecy? Could we have known this is coming? Absolutely not, guys. But it's just very funny how the markets, that was the liquidation point of maximum pain. And that always happens. It seems to always be in or around the areas of maximum pain, right? There's probably reasons for that, but I digress. Don't want to look into it. Don't want to over project too much. Yeah, but very nice rally on SMH. We'll see if they can get continuation and reclaim some of these uptrends. Moving on to the Russell right now, 8.5% to the upside, coming into resistance as well. That is 200 down to 189, 190. Daily downtrend is still in the favor of the bears right now. Keeping a look at this 618 bounce overall. You're looking for the same thing, looking for the daily higher lows for possible further trend continuation, or rather trend recapture by the bulls, and now we are still in the context of this sweeping weekly downtrend. So a lot of work to be done, guys. That's why I say, FOMOing here and going for the absolute moonshot, there's still too much uncertainty on the tables to assume that that was the absolute cycle bottom and that we are coast clear for the next 2, 3, 4, 5 years. That's the absolute bottom of the markets, and we're marching on to the all-time highs and beyond, guys. You got to be patient for that. Not all the uncertainty has been removed from the markets just yet, so keep that in mind. And now lastly, the Dow Jones. Dow Jones up 7.87%. One of its best days on record as well. I mean, I don't have it up here, but best days in Dow Jones history. We can look it up together. It has to be one for the records at least. Maybe not. That one's only 7 about. Is 2025 up here? Oh, it's right down here, number 19. So unfortunately, not as good as some other times, but still, right? Very, very healthy day on the Dow Jones overall. Daily downtrend is still to the bears right now. Nice bounce right now. The bounce size is about 75% bounce coming into resistance, though. Didn't think I'd have to change this box so quickly, but as a matter of fact, I will. So as a matter of fact, we're coming into that resistance zone, 42,000 or 41.3 down to roughly 40,005. It was a decent level of the past, not a significantly huge level, but it is a level to watch out for. Keep in mind the context, still a weekly downtrend for the bears. Still need to change a lot in terms of the short-term timeframes, but it's good. Your higher low area could be targeting 39.1 down to 37.8 for a little bit of a maybe retest, reset the trend, make another leg higher, and then you're just going to be expanding on this weekly move and trying to reset those weeklies eventually too. So, I mean, the bears have most of all the time frames already. The bulls have a very nice bounce. Now we need to see all of those conversions. Moving on to the VIX. VIX down 35% from the highs of the week pretty much, which were 60 today as well. 58 was the high of the day before. From the top to the bottom, you're talking about almost 45%. The VIX still above its big area that it blasts out of every now and then when the times get extremely uncertain, such as during the pandemic, such as during the Japanese carry trade unwind, a few times here in the bear market of 2022. And then you had 2018, similar tariffs, 2015 after the inauguration of President Trump the first time, the flash crash of 2011, and of course, the great financial crisis of 2008, right? Now, volatility can stay high because the moves are probably going to be very wide in either direction in the next few days as institutions and retail traders reposition and reprice and reestimate the odds of recessions, tariffs, reciprocation from Europe, and everything in between. So the VIX could be maintained high, which is very good for us if we're looking to sell options into the market right now. But overall, a very nice, healthy move down into the VIX. Still have that resistance, which is now support between 30 and 25. So we'll keep an eye on that. The bonds we touched on prior, but this is now a nice reversal pattern on the bonds for both the 10 and 20-year yields overall. I do assume that now if recession odds are plummeting, the bond trades will come down, but it's also a product that there now being more certainty in the markets and now less risk of forced liquidation for bond traders, whether those be institutions, foreign governments, and anywhere in between, up or down. Overall, though, very nice move, right? Sweeping move down. We will see if the bears can recapture, well, the yield bears, we'll see if they can actually push these yields back to the downside and just say that the recession odds are lower and lower and lower. But in essence, it's the predictability, right? The predictability of the credit markets have now gotten a lot better. And maybe we might see a little bit more stability in foreign currencies alike, such as the dollar and several other foreign currencies too. So we'll keep an eye on that. The TLTs as well have more than likely bottomed into our support range. Very decent. They held. I mean, it was bad, guys. I don't know if I can find you a futures chart. Let me check. Okay, so I found the futures chart, guys. This is what I was talking about. This move last night, which is very funny because Trump said that there was some talks last night when he was giving the press conference that people were feeling jittery as of last night. This was the move in futures, guys. This is bonds, yeah? Now, this futures chart is obviously skewed because we're taking it from, I don't know, some currency exchange or whatnot, but it was a very, very steep move. The TLT, I wish I could find you the direct one for TLT, but I tried to do it really fast. The TLT was down at one point over 3, almost 3.5% in overnight trading. And there was only one market that was open at that time. It was not Europe, it was Asia. Asia was open around 8, 9 p.m. last night. You can argue Australia and New Zealand were open as well, but it was Asia. So something happened. Something either happened in Hong Kong, in Japan, or China, or all three to trigger a swift decision change over the course of the day today. I digress, right? TLT now up back to 88. So it could be a decent little swing trade right now on the bonds. Now we have more certainty, guys, so keep that in mind. could be looking fairly good. Now, moving on further, guys, gold with a very big intraday swing as well. The bounce started a lot before. It started yesterday night in the overnight session, of course, during Asia too, as people flooded to safety after the bonds were unraveling. Daily has been lost, but the bulls have a chance of reclaiming this. A little bit of a retest, a back test back into 3,036, all the way down to about 3K. Could just be looking for a higher low and maybe recapture the daily uptrend. Or is this the end of gold? Now that the rest of the markets are possibly going to head higher, now that there's less uncertainty, maybe very tough to call, right? But if it is, well, you'd be looking for first a new higher low, and just keep an eye on the 12, which is this whole area, 2954, down to roughly 2900, the retest of the 12 EMA. But could just be a temporary local top on the gold trade if ever people rotate back to equities. Not saying risk on, I'm just saying maybe we don't need as much protectionism or a protection that the gold trade does offer us, right? So very, very complex. Look at these moves on the percentage of stocks overall in terms of market breadth. Percentage of stocks below their 20-day, back up to 17 from 3 yesterday, which we covered on the channel. Above their 50-day EMA, now back to 12% from 7.5. So you can see, like, it's still good levels to be buying, even for long-term portfolios, guys. Now, you might be mad because you missed the bottoms. Yeah, you might be saying, well, I can't buy Amazon here. I can't buy Amazon here because it used to be all the way down there. You can't look at it like that, guys, especially not with a long-term time horizon. You have to look at the current price. Is the company decently valued? Is it still cheap? And the answer, we're going to get into these in a bit, yeah? But the answer is for many stocks out there, they are still cheap. Even if we rally to the sky today, it doesn't matter, yeah? The companies objectively, a lot of them in the markets are still cheap. So just look at it that way, yeah? On to Bitcoin right now. Bitcoin up 9 on the day, and the rest of crypto having a very good day as well. The bulls now trying to engulf, still in a daily downtrend though. Big engulfing move. This is arguably a 100% retracement. They still need to set the daily uptrend. They have a lot of resistance ahead. All of these guys, the moving averages, and just above that, we have the 87 all the way up to $92,000 trade as well in terms of resistance. Overall, still in a weekly downtrend. The move is very nice. If I'm looking for a long on Bitcoin, possibly one of two things need to happen. Reject from resistance, give me a higher low, and then go for the upswing. Or, I mean, if you're really feeling it, guys, and you just want to go long, I can't blame you, but just try and trade with a stop loss, even if it's a very wide one. You know, if you're trading these weekly timeframes or the monthly, right, you're going for the expansion over the course of the next 1 to 3 months, possibly. If you do get some sort of a rally back into the markets, the stop needs to go below the lows. You know, and then you're targeting the all-time high expansion. But shorter term timeframes, you really do need to wait for a pullback to give you some better levels to base your trades off of. Because what are we going to do? Take along here and set a take profit into resistance with the stop loss all the way down below there? It doesn't really make sense, right? I mean, unless some of you are trading the 5-15-minute time frames. But for anybody looking for the daily swing trades, it's just too wide, right? So keep that in mind. And overall, crypto recovering as nicely as well. Now let's move into big tech, shall we? So moving on into Apple, 15% day on Apple to the upside, looking very decent there on Apple's chart. Even for Apple, guys, I mean, under 200, it's not that it's a bad deal. And I was saying yesterday, even at 175, it was a decent deal to finally be looking at Apple for some long-term portfolio adds. I've been very patient on this one. And, you know, although Apple, the revenue growth rate is not that hot, they have their problems in China. They had the tariff headlines and everything like that. But at the end of the day, you got to ask yourself, right? Is Apple really going anywhere? People are just going to stop buying iPhones, stop buying iPads, stop buying AirPods, stop buying everything Apple does, stop using Apple services, stop using the App Store? Probably not. Just will they grow a little bit less aggressively than they have in the past until they find a new S-curve or until they find a new innovation curve? Yeah, but it's a very solid company. And when it comes back into 2023 lows, you're going to have to oblige unto a little bit of a nibble, right? That being said, for short-term trades, well, your daily downtrend is still largely underway by the bears right there. Although we've cleared above a nice area of support, 195 to 187, we now have a tradable bottom. If I'm looking to sell puts on Apple with the remaining volatility in the markets, the trades need to go 175 or below, the bottom end of the fear low range when RSI was absolutely crashed to the downside. Yeah, but we have not changed the trend. Keep an eye out for that trend change as the bears are still well in control of this very large sweeping weekly downtrend. We will see how high they can push the bounce. They will eventually need to reset this weekly uptrend too on Apple, but very nice move overall. And probably one of my favorite, even if it's up 15%, guys, keep in mind, what's the one thing that we do not have yet? We don't have negotiations between the US and China, and Apple is part of that whole China trade, right? You may as well label this ticker Alibaba or any other Chinese name out there because it's going to react the same. It stands to gain the most from any negotiations down from the current tariff rates, which are elevated, which means if the tariff rates remain elevated, Apple still does have a little bit of that China-US tariff headline risk. So keep that in mind, which is why I'm saying, shouldn't be FOMOing here. If you are playing this one, we should be waiting for pullbacks or at least writing under the fear lows. Moving on to AMD right now, up 24% on AMD. And even if AMD is up 24%, it's not even back to last Wednesday's levels, right? It's kind of sad, truly. When you look at this chart, it barely makes a difference to where AMD is today, but still 24% to the upside. I bought a little bit of AMD shares at the bottom yesterday, of course. Now, moving it, well, not at the bottom of the day, but in yesterday's candle, I acquired some AMD shares, but still, you know what I mean? We've been talking about this one on the channel for a while. Daily downtrend, nice push to the upside right now. You have a nice move up, almost a 75% retracement, but coming quickly into resistance. Yeah, this whole area is going to be resistance, and it's a big one overall, guys. Talking about 97 up to about 112. So we will be looking eventually for the higher lows. Maybe they can engulf this full move, set them up here. Maybe they set them down there, but I will be looking for higher lows. If we're looking to sell puts, same concept, into support below the fear lows overall. I'll remind you who's in control of this chart right now. Still the weekly bears until the bulls get a trend change. Maybe is this the catalyst to finally get AMD a trend change? Who knows? Possibly, but the company is still trading very cheap, even at 96. We redid this valuation yesterday at 78. Now you want me to do it at 96? None of the EPS has changed at all until we get that corporate guidance, but it shouldn't really change that much. So let's say 96 divided by 465 in EPS, it's a 20. So it goes from a 60 to a 20. Is that expensive? Arguably not. And we divide it by their EPS growth rate of 30%, which I am under Wall Street's estimates, by the way. I use 30, they use 38. You get a PEG ratio very simply right now of 0.68, 0.69. That's still very cheap, guys. Objectively speaking, sure. You're not buying the bottoms. Can it fall more throughout the year? Yeah, absolutely. But is today, objectively speaking, a bad buy? No, if you have the AMD thesis as well. Moving on to Amazon right now. So Amazon up to 12% in the daily markets and now up 0.5 in the after hours as well. Still the context of a daily downturn reacting nicely from support down here. And we were saying, guys, that this was a very big level for Amazon, yeah? Not only Japanese carry trade and 200 weekly EMA, but the highs of 2020 and 2021 alike. That being said, the bears are in full short-term control of this weekly as well. So you need some trend changes here, guys. The bounces are nice. These are all 70, 80% bounces or more. Eventually, can they fully engulf? That gives the bulls the best chance of resetting up here. That would be the best case scenario, reclaiming 191 to 178 and putting in a higher low, then going for it possibly. That would be a very nice scenario. But if we start retesting lower as of tomorrow, writing puts, I love to write puts with still a high VIX at or around the fear lows. If you are a fan of Amazon stock, this is still one of my favorite companies in the entire market right now. And at 190, I mean, I dropped this valuation just yesterday. I'll redo it again to show you guys that it's still not even that bad, yeah? Amazon 190 divided by 633 in EPS, it's a 30 forward price to earnings. Amazon doesn't really trade often at a 30, especially not when it's improving its free cash flows and net margins, yeah? And the PEG ratio, how much are you paying for this forward growth? You're not paying that much, yeah? And I'm under the estimate. I took 20. The street's at 22. So I'm giving it a little bit of, wiggle room, margin of safety, right? 1.5 is the PEG. Fairly decent overall, objectively speaking, on Amazon. Nothing bad to say. On to Google right now. Google up 9.88%, one of Google's best days in recent memory, but fitting as usual. Google is still, it's moved down more, and on up days, it goes up less. Very unfortunate for Google, but Google did do one thing already. It has a daily uptrend shift right now. This is the first of its kind since back here in March. Looking good, but quickly approaching resistance, 163 up to about 175. So keeping that in mind, as soon as this move is topped up, looking for a higher low. How do you know the higher low is coming? Eventually, this hourly uptrend will run out of steam and set the downtrend. That's when you know it's done, probably into resistance and looking for a higher low on the daily timeframes overall. So keep that in mind. I'm sorry, guys. I was on the 4-hour time frame. We got the 4-hour trend change. My bad. Not yet a daily uptrend, but an engulfing move on the daily. So still, context is the same. Looking for a higher low. Anything now above 144. This is the fear lows. Any short puts I want to trade, they go below those lows overall because now we have achieved a tradable bottom with peak fear catalysts that probably are not going to get retested unless Trump puts all the tariffs back on as of tomorrow morning, which is the unlikely scenario, yeah? And even if we're looking for some long-term portfolio buys, Google's cheap. It's been cheap for a while now, and I've been very vocal about this, yeah? At 156, we're arguably where we are right now. 17 forward price earnings and a 1.16 peg. Still one of the cheapest big tech stocks in the entire market. Moving on to Meta right now. 14.76% to the upside, looking very solid on Meta overall. Nice, almost engulfing move. That is a 100% engulfer, trending above the 200-day EMA. Still in a daily downtrend until we change the trend overall. Meta's going to be one of two things. If we start moving lower, looking for a higher low above 485, and if we engulf fully, then they can use this area, right? 585, let's call it 600, yeah, down to about 560 as support for a possible swing trade long for a trend change attempt. Looking very good on Meta, but the context is still a weekly downtrend overall, so please keep that in mind. Looking to set the monthly higher lows, which I assume now at this point are set, unless the volatility gets even crazier during the month of April. But all these companies have earnings in just a few weeks, right? So keep that in mind. At 531, 10% lower than now. Their PE ratio was 21. Just add 10% to this. So what is it now? A 23? Big deal, right? 10% of the peg is about a 1.8. So still Meta relatively cheap in terms of historical standards of its price to earnings, and still a favored company, guys, for the next 3 to 5 years. Meta's free cash flow and Meta's net margins and their advertising expansion is no joke. That narrative was put into question because of a oncoming recession. But if the tariffs are negotiated before a recession possibly rears its ugly head, then maybe corporations won't have to pull back on advertising spending as much as they perhaps thought they would leading into today, essentially, right? Moving on to Microsoft right now. Microsoft with a nice engulfing move. This is a 100% engulfing move as a whole. I sounded like Doug DeMuro, the car guy right there. This is Microsoft's chart, right? Anyways, moving on further, daily downtrend, full engulfing move right now into resistance 393 up to 408. Not looking too bad at all out of daily oversold and in out of our support area, which I was saying, guys, this is a fantastic area to be buying Microsoft. Even here, the whole time we were there, I was still saying it's a fantastic opportunity. It got more fantastic, but still, guys, Microsoft is Microsoft at the end of the day. It's not all the time that it presents you with a sell-off of either now we're down 17. Before we were down 25. Big deal. In 5-10 years, if you guys are long-term investors, when Microsoft's going to be all the way up here somewhere, are you really going to care whether you bought Microsoft stock at 390 or 365? It's kind of a drop in the water in the grand scheme of where you're going with your long-term portfolios, yeah? So keep that in mind, you know? Don't be too sad that you missed the bottoms or whatnot. Nobody knew. Nobody, it's hard to commit all the capital expecting him to pivot today, right? I mean, come on. Like, you know, guys, like, don't be too hard on yourselves, yeah? So if you do retest lower, 378 to 363, any retest, opt for some opportunities for a swing trade long or maybe even some short puts under the market. Moving on to Netflix right now, up 8.62%. Also a nice daily engulfing move, eclipsing the highs ever so slightly. Back above support too, 935 to 890. You're going to be looking for a daily higher low, possibly for a trend change long back to the bulls, and avoiding the prophecy, the head and shoulders prophetic pattern that this is an 80-85% probability pattern, guys. It's not often that it gets rejected, right? But if it does, if the bulls are able to push, change the daily uptrend and move towards these highs, you will effectively be erasing that shoulder and maybe moving into Netflix earnings. Tough to say, though, guys. They literally have earnings next Thursday. There's very few days of trading. I would not be surprised if Netflix's performance back to the all-time highs or back to these lows is arguably beholden to the results of these earnings. Moving on to NVIDIA right now. NVIDIA, 20%, 18.72% to the upside. And it looks like they haven't even gained that much. We're literally back to where we were at the end of the month of March, just above the date of the tariffs. Now, daily downtrend was in control for the bears. Big engulfing move. So now the daily downtrend is canceled. And now we are back above support. 111 to about 101 on NVIDIA. Could be looking for a higher low for possibly a further swing trade long overall. Now it's good. We have the fear lows. If we're looking to sell puts under the market, we have to be going with the fear lows, similar to the same ones we had with the Japanese carry trade unwind there. It gives us a tradable bottom, as we like to call it. So weekly downtrend was in motion. That has not changed, but the bulls putting in a very sizable move against the even weekly time frames right now. It is now on the weekly basis a 78% engulfing move. I'm not saying now's the time to just plow into NVIDIA and we're moving on to the all-time highs. No, there's still a lot of uncertainty. still a lot of rumors and negotiations and reciprocal tariffs between China and the US. That's a big end market for NVIDIA. I'll remind you, they generate over $17-18 billion of their H200s into China overall. And we know trade tensions have been a bit high. Keeping that in mind, though, NVIDIA is relatively cheap right now. Even at above 10% of this price, you'd be looking at like a 24 forward price to earnings and roughly like a 1 peg. It's pretty cheap right now. So NVIDIA, decent play right now, but be very patient and kind of go light because, you know, it would be kind of unprofessional of me of saying, yeah, this is the bottom for the entire year. There's no more uncertainty whatsoever. We can absolutely commit to a bunch of leap call options, full YOLO, absolutely long. And in the next 3 weeks, we're going to be at 180. Yeah. It's a stretch, right? Moving on further into Tesla right now, 22% to the upside. Tesla not testing levels that we've seen since last Friday. Tesla moves in such a volatile way, right? Very crazy right now. Daily downtrend, and now we get the big upswing, but no trend change just yet. Need to take out these highs either for an engulfing move or reset into a nice daily uptrend into resistance right now, 301 down to 258. You got the 200-day EMA right above us as well. So need to see those trend changes because the bears are still in full control of this weekly downtrending pattern as well. Equal lows. If you take out 290, that is officially a weekly uptrend, and you could be looking to move towards the top end of this resistance, 300 on Tesla overall. The bulls must be happy on this one, but objectively speaking, Tesla is still the most expensive Mag 7 company of all of them out there. And Tesla does still have the uncertainty around it, right? Both from, I'm not going to talk about the brand sentiment, right? Because that's obviously an issue right now, but also faces more steep competition, especially coming out of China overall. I know a lot of people don't want to hear that, but it's true. Just go look at their cars. They're actually quite nice. They didn't used to be that way 7-8 years ago, but you know, the rest of the EV market has largely caught up with Tesla's technology. At least you can argue maybe not the FSD portion. Some people say yes, some people say no. But in terms of the interiors and the functionality and the designs, I would say yes. Moving on to Palantir right now, up 19% of its own. Now, daily downtrend has been annihilated by the bulls. Engulfing move, looking for a higher low. As soon as that move tops out, you're looking for a higher low. Anything above the fear lows, 66.5. Looking for a retest maybe of this level, 83 down to 76 for a nice trade zone. This would be looking for a higher low for a possible trade attempt back onto the $100. That's if we don't just eclipse it as of tomorrow or the days in the next few days as well. Palantir, they did have a weekly downtrend, now looking like a very nice engulfing move overall on the weekly time frame as well, yeah? 78% retracement. It gives the bulls a very good chance of setting up the 1-2 punch for the weekly trend change into their earnings, which is Monday, the 12th of May. Objectively speaking, though, Palantir is still extremely expensive. If it was expensive at 78, guys, I mean, it's more expensive at 90 as well, right? So not a big fan of buying up here. I did one little contract of Palantir when it was down there. It didn't give me, you know, Palantir was only down here for all of 1 day, yeah? When it was down there, I wrote some short puts below 50, but now, you know, unfortunately, it's right back up, right? So congratulations if you're still holding the bag on Palantir. I still have some Palantir long-term shares. I'm not fazed by this at all, but probably not the best idea to just FOMO back into this one blindly, yeah? Moving on to SOFI. SOFI up about 20% as well, looking very good, but did not eliminate the daily downtrend. Very nice bounce, though, overall, yeah? This is like a 78% retracement overall. Very nice. The fear lows are now set. If we want to make any trades, we have to make swing trades, right? Either looking for daily higher lows, which I showed you how to do. Just watch the hourly timeframes when you lose them, and then eventually reclaim them back. Then the entry goes here, stop goes below there if you want to keep tight, or there, keeping an eye that that's going to be the daily higher low, something like this. Whether it happens up here or here, you're going to see the same pattern, guys. Just watch the hourly if you're trying to swing trade with shares or call options or whatever your preferred tool is. But if you're looking to write short puts, we write short puts in or around the fear capitulation lows overall, because who controls this? Still the weekly bears. Yeah, very clear. Still the weekly bears. Got a lot of work to do before saying, yeah, that's the absolute bottom of the entire year, of the next 2 years, the next 3 years, and we can just pivot long, full call options, absolute YOLO, guys. Don't think like that, right? If you're a long-term investor, guys, accumulate more shares. It's no problem. If you missed the bottom, you were at work or something like that, you just saw the news tonight, at 11 bucks, guys, SOFI is not that bad. Sure, okay, wow, it wasn't as cheap there. But if you're a long-term investor and your thesis is for digital banking to be the way of the future, and you're in SOFI for the next 5-10 years, you're expecting it to go to 30, I mean, what's the difference, yeah, between buying it at 9.5 and 11.30? There's not so much. Of course, every dollar matters, every percentage of ROI matters, but what can you do? You can't go back in time, right? there's a lot of uncertainty back there. I can't blame you guys for not wanting to buy. Maybe a lot of you nibbled, but if you didn't buy at all, I wouldn't feel bad about buying here. I mean, forget the whole aspect of you're chasing the market and, probably there's still going to be another capitulation bottom. There's still a lot of uncertainty on the table, guys. So remove all the projections and the reactions and forecasting and what you think and all the emotions involved. Focus on the price. Are they at a manageable price in relation to their future growth? And the answer is, even at $11, the answer is yes. Less so, or, they're a bit more expensive now than they were at $9, but are they expensive objectively? No. And you're still getting a phenomenal discount, right? So keep that in mind. Moving on to Uber now, 11.7%. Uber, very nice recovery into the highs right now, almost engulfing the full move. So Uber looking pretty good, all things considered, with today's movements. Daily downtrend, though, in control by the bears, still nice, like what is this, 85%. If they can clear this resistance zone, which is 73.50 to 68, they'll have a good chance of getting stopped out here, looking for the higher lows and maybe going for the swing trade, which will, again, light up one of the trades. We had this swing trade back here into the highs. That was a nice take profit area. Now we might just get it again, right? The breakout, the retest, going for the trend change and the breakout higher. Maybe I'll be looking out for it myself. Weekly downtrend still in control by the bears, however, as we are just in a very big fat range of monthly consolidation. If we're looking for short puts under the market on Uber, you should be targeting the fear and capitulation lows, which are synonymous with this very big area of support, 63 down to 55. And lastly, TSM. TSM was one of my favorite buys in the entire market. Hopefully I was vocal enough about it this entirety of this crash. Objectively speaking, though, is TSM still cheap? Is TSM still cheap at $160? Well, let's do the math together, yeah? Before we get into the technicals, the forecasting, the projecting, the opinions, objectively speaking, is the stock cheap in relation to its crazy growth, the guidance of which we just got a few months ago, more guidance of which we will get next week on Thursday, TSM has earnings, yeah? Is the stock still cheap right now? 1535, 160 is the price divided by your EPS. I'm talking too much with the calculator. 17.5. 17.54 is a forward price to earnings. Is that cheap? Pretty cheap, right? 17.54 divided by 17 EPS growth. It's still a one peg. It's still a one peg. So I really don't want to hear people tell me like, oh, I missed the chance on TSM. I can't put this one in my long-term portfolio anymore. I didn't speculate on Trump keeping the tariffs on or not. I didn't speculate on the resilience of the bond market or the equities market. I didn't read the art of the deal. I should have known better. Guys, it's all just noise, right? Just look at the price. Channel your inner Warren Buffett. Is the price cheap? The answer is yes. Sure, you're not getting the bottoms. It doesn't care. If you have a 5 to 10 year time horizon for investing, guys, you should be investing on this. The qualitative aspect of the company now presenting you a fantastic buying opportunity for all of this EPS expansion, its market-leading status, its revenue expansion as well, and just being a fantastic company with amazing net margins overall. So keep that in mind on TSM. Now, in terms of the technicals, well, the daily bears are still in control, right? You may get more of an opportunity. Who knows? But these are the fear capitulation lows. Any swing trades for some short puts should be made under this area or around that area overall to ensure that you have a lot of bulls that are willing to step in at those prices. The daily uptrends need to be changed. We still don't have that, and we are moving into resistance 171 to 155 with the weekly bears still in control of this chart. So a lot of trend changes need to occur for a lot of these charts. The bounces are very nice. They're very sexy. They're phenomenal. They are absolutely great. So hopefully you guys enjoyed the gains in today's markets. There's still a lot of names out there, guys. China-specific plays that might, I sniped this one early today after that news. But all the plays, that are beholden to tariffs, the plays that have gotten hit the hardest from tariffs could be worth exploring. And or if you want to make projections on the two trade players that have not, the one trade partner that has not benefited from this tariff reduction, it's China. So if there's any asymmetric bets in the market right now, it would be that maybe the tensions will escalate a bit further, but eventually, maybe over the next 30 days, there will be some form of resolution, negotiation. What do you think is going to happen to these stocks that got the hit hardest from the China news? Well, they're probably going to fly and play catch up with everything else that got less affected, right? So that's going to be the niche trade moving forward for me, at least in the next 30, 60 days. If I want to speculate on anything, that's an asymmetric bet that I'm willing to take, whether you take that with companies like Nike, TSM, NVIDIA, AMD, companies like Restoration Hardware, like anything that has exposure to China, or you take China directly, like a play on KWeb, a play on Baba, other companies that have come down a lot. That's up to you, but that's a niche play that I'm heavily exploring. Special shout out as well to my good little friend down here, Elf Beauty, the undercover, the stealth play that nobody's looking at right now that has gotten affected by the China tariff rumors, right? And the problems out of China for a lot longer than the tariffs have been in place. This started happening from when they were announced, when Trump essentially got elected, and then it really started falling off, yeah? So maybe this might be a hell of a trade that is still daily oversold, still weekly oversold as well. I don't know, but the risk to reward might just seem there. Now let's move into some of the trades, shall we? Okay, so obviously you guys saw the trades that I took on the Monday session in the video, yeah? So a lot of those were either wound down yesterday and repositioned to new trades. Here's a list. If you guys want to take a screenshot, all the zeroed out positions are the trades that I had. The new ones from yesterday that I closed. I'm not going to take you guys through each one because it would be cumbersome. All you need to know, it was the bear market strategy, writing puts well under the market with a very high VIX. I was able to wind down the trades from Monday, yesterday, then new trades from yesterday into today's bounce as well. And now I'll show you the trades that are remaining. We've made a decent amount of money over the course of this week just on those types of trades alone. But when I caught the news very early, I did commit to some positions for a cautiously optimistic, little bit of a bull rally that we might be seeing in the near-term future. This is not FOMO. This is just trade repositioning as traders for the trading portfolios, not for the long-term investing portfolios. You guys know I held strong and I DCA'd and I just bought more shares throughout this entire correction. But for the trading portfolios, you need to react and adapt. Whether the uncertainty factors have come down from 90% to 30%, they have come down, and that's what the markets have been looking for. We know this entire correction has been predicated on those tariffs and the uncertainty that they have brought. Now we will probably be seeing more negotiations over the next 90 days, more so than less negotiations over the next 90 days. Can we be seeing retaliatory measures from Europe? Yes. More from China? Yes. But is there more or less uncertainty than yesterday? There is less uncertainty. As a result, we have to pivot once again back to bullish leaning strategies. I mean, they've always been bullish leaning strategies. It's just that when you know that I'm writing puts under the market, yeah, I'm going to be a bit more aggressive in my methodology, still not chasing, but still, writing with high VIX under the market in or around our tradable bottom lows. But I did take some long positions that I've committed to with a lot of time on them to kind of play the long side as well. So let me show you those positions real quick. So there's a host of positions that I still have. The Apple 155s from yesterday, they're almost worthless. I wrote the AMZN short puts as well. This is 2 times leverage on Amazon in or around the tradable bottom. These are for next week, 2146 in or around the tradable bottom. This is arguably a 1.5% trade for next Friday. So I took it. Elf Beauty, I still have covered calls on Elf Beauty and another DCA contract at 44.5. which I doubt will get filled by Friday, but we'll see. I also have these 62 calls for this Friday. We'll see if they get tested or not. My average cost basis on Elf Beauty on these shares, after running covered calls a ton in the last 2 months, is down to like 58. So I'm pretty happy there. The grab shares are in place. The KWeb 25 puts as well. I took those yesterday. They're now back to par. They ran away with us, or on us rather, on the VIX, but never really had a chance of getting tested. Even yesterday, 28. I was all the way down here at 25. It's like, just give me the shares if you want to, right? That's like the bottom before all the stimulus happened. So I was like, just give me the shares if you want to. I have a new one from today after the news. I got towards the end of the day, it was lagging a little bit, 40 cents for Friday, which is decent, like 1.5% there. I have the on semi as well, which I wrote yesterday, which are pretty much worthless by now. 27.5s on, right? On ON semiconductor. Sorry, ON semiconductor. 28s, 27.5s, all the way down there. That's like stupid levels, right? That's like, 2019 highs. That's all the way I got down on semi. So there you can see the style of trades I was looking for. Still have my 4 meme shares of Restoration Hardware. They're not so meme. I truly want to hold these guys for like a 2x. I'll hold them for a long time, as long as it takes. So that one was there. I still have the cash invested in SGOV. If I need to deploy some of it, I'll just sell that. It's a money market fund, essentially. The SOFI shares that I've been having since 16, which our average cost is now down into the 13s, average down attempt at 11 and 8.5 over the course of this week. Both of those, I mean, we'll see what happens, right? Maybe I get assigned the 11s or not. Probably won't get assigned the 8.5s, but I have been trying to lower the cost basis overall in that one too. SOXL, I played SOXL a ton over the course of this week, just trying to make back some losses that we had into last week on SOXL when, we got hit with the tariffs in China, and this one went down like 50% in like 2 days. So we're trying to make back some losses. I wouldn't mind holding some SOXL shares if I somehow get assigned. I'll try to play them close. Maybe I'll take a little bit of a swing trade there. The VIX swing trade as well, starting to come alive, even though the SVXY just doesn't, this is short VIX. It just doesn't move as fast as the VIX moves up and down. I'll keep this one overall, but we're just going to be making a play on the long-term recovery of this volatility. Yeah, big move down. I'm going to try to play it to the upside. If VIX continues moving down for the next few days, this trade should come alive a little bit more. And if it stays flat, I'll just close it out as such. But we got this one when VIX was like 50. It just doesn't move because it's daily reset, yeah? Symbiotic, another good one we got towards the middle of the day here after the tariffs, 17.5s on Symbiotic, 24 cents we got for next week overall. This is a robotics play. They're a partner with Walmart as well. We got the 17.5s, the low of the capitulation lows. That's what I want. TLT, we still have these calls. Didn't touch them. Still keeping them in place. We've had these June 95 since like August. Dare I say even early July. I DC'd into them once. I'll hold them. We'll see what happens. TQQQ short puts, they're almost dead. We wrote those yesterday. Tesla short puts, I stepped them up from the I think I had like the 120s the other day. Anyways, I stepped them up from the 120s or the 125s. 150s for next Friday. They went underwater. These were like $2 yesterday, but still so far away. These are for next Friday, so we'll ride them into the ground. TSM, these were taken after. I've been playing TSM, a few times over the last few days. These are the new 135s taken just today after the tariffs around the capitulation lows. We took them when TSM was up about half this much. TSM was up about 6 at that time. I went for that trade overall, 0.5% by Friday, right? 65. They're now almost worthless, making some nice premium there. Here are my long trades, the new long trades overall, guys, which I want to show you guys real quick. I did not fully commit, not even close to full longs. We're not FOMOing nothing. These are all just niche trades overall. Nike, recovery and possible recovery of, or possibly mending of the tensions between China and the US. Gave myself until July for those. 60-65 bull call debit spreads. We're already up on those after the news. Amazon, this is a leap call debit spread for when? December 27th of 2027. 3 years, guys. I'm giving myself for this play to expand, but I did take this one after the tariffs when Amazon was up about, I don't know, like 6%, 7%. We took them, and now we're up slightly on the play, slightly because we took them at higher VIX, but now I got a good level. I'm happy with the level. I'll hold them for the next 18 months. It's the only leap play that I'm committing to. Why? It's my favorite company in the market, and I want to catch a piece of it. If it comes to the downside, I can close the short side of this call for a profit and ride the long side of the leap if I have to. That's why I open it as a debit spread. All right. Moving on to UPS. UPS was one of the ones that was hit the hardest recently. We opened that one after the tariffs were announced as well. We are up slightly on that trade, despite what Interactive Brokers is displaying as the last traded price. 105 to 110s on UPS. Been watching this one for a while, guys. For a while. It got crushed. It's been crushed for a long time. Can it benefit from a recovery rally? Yes, and that's what I'm looking to go for. Very small. Apple, same concept. Same concept on Apple, guys. 200 205s for July. Full call debit spread. Got it for $2. It is now up. Despite what Interactive Brokers says, this contract is like 260, 270. We're up like 31% on it already, as you can see to the left side of my head or the right side, depending on which, if you're viewing your screen upside down or not, I guess. Moving on to KWeb, same concept. Same concept. China asymmetric bet. Mending of the trade relations, 31 versus 36 for August. I'm giving this one more time because it's specifically China, not so much indirectly specific to China, but directly specific to China. We got $1.82 on those, so we'll be looking to ride very small, 4 small call debit spread positions and 1 big leap contract overall. The rest is entirely still the wheel strategy. The tone of the trades moving forward is still cautiously optimistic, pivoting slowly back to bullish leaning trades overall, slowly back to slightly more aggressive wheel trades, but still staying cautious, respecting my levels, respecting my rules, and moving forward, just targeting the tradable bottom lows on all these companies too, like not Tesla so much, but maybe like NVIDIA, other companies like that, like Microsoft for some short puts, stuff like that, right? So I will be trading a lot moving forward. Now we pivot from the bear market strategy, high uncertainty, high probabilities of recession. That's the bear market strat. Now we slowly pivot, slowly back to the bull market strats. and try to milk this market, especially through earnings season, as much as we can with the remaining volatility on all these stocks now that they are still, even after today, at very attractive levels. Hopefully that makes sense. If it did, and if you like this video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We'd love to have you back. We do these every Monday through Friday after the close. And lastly, if you have any questions, guys, please feel free to leave them down below. Anything you want, stocks, options, long-term portfolios, macro, or just constructive criticism, whatever you want to say, I'd be glad to answer you down below in the comment section. And in the event, guys, that you want access to all these trades in real time and so much more, all the trades, whether the credit trades, right, like put wheel strategy, call credit spreads, call debit spreads, put credit spreads, long-term portfolio trades, everything, all my trades in the Discord. The link is down below. You also have access to private morning live streams where we stream for about 2-3 hours. I trade live and take all your questions on your stocks, your options, your long-term portfolios. You can be in there with almost 200 members, guys, that have the same view as you. We love farming premium in the markets. We love having consistent trading strategies. No YOLOs, no FOMOs, just consistent trades and adapting to the landscape with our trading portfolios, but also building very high quality long-term portfolios as well with our paychecks and just, with our goals in mind, our long-term future goals, whether your goal is buying a house, whether your goal is, who knows what your goal is, but there's something for everyone in there. I trade live, take all your questions. If you cannot attend, they are all recorded. You can ask me all your questions in our chat rooms here all throughout the day. And you also get access to my private videos where I go through a number of different advanced option strategies that I don't show on the channel. Accounts, small account strategies, medium, very large account strategies as well. How to grow small accounts, how to grow medium accounts, what to do with large accounts as well if you're conservative. And also you get access to all my watch lists, all the watch lists, all 5 of them or more, and all the annotations and technical analysis that you ever see on charts. With a click of 2 buttons, guys, you can just copy paste all of it, all my annotations on over 100 different companies, more than 100 at this point in time. You get all of that included in the Discord as well. And just good times and fun times. If any of that sounds good to you, the link, of course, is down below in the video description. And if not, I guess I'll see you back on the channel, guys. Pleasure as always. Hopefully you enjoyed this one. See you guys tomorrow. Take care and peace.